what's really interesting is that less participation can sometimes lead to more extended moves, is what we're seeing in the markets today. So the clock is ticking, time is flying. We're now in our last block. It is Friday. We're heading into a new trading week with a UK rate decision, PMIs from Europe, retail sales from Australia, Canada, almost nothing from the US outside of personal income and personal spending. So with that in mind, we'd like to see what your best trades are for the coming week. Let's start with you, Chris.
Right. So I think it's appropriate to speak about the dollar, being that given everything you just said. So I'll start there. The dollar index. Okay, it looks like on the daily time frame we've got a beautiful King's Crown formation that's formed here, or sorry, a sub-crown formation. We're currently sitting after the most recent rally. We're currently sitting at, it looks like, just shy of a 69.4% Fibonacci retracement level. And so if this holds, then that means that we're still technically at a 618. So I'd be very bearish on the dollar if this does in fact hold and we start to see a pullback at this point, because what I'm anticipating that the market's doing right now is forming that right tip of the crown. So you have your left tip, your center tip, and then this would now be the right tip forming of the crown. And so I'd be looking to target 87.12 on this. And that makes sense because if I turn over to the pound dollar, okay, I'm actually longer term bullish on pound dollar. So, right now we're seeing the dollar strengthen. I'm taking advantage of that move in the market currently, but longer term, I am expecting that it'll start to weaken again. And so that would, of course, translate into strength on the dollar secondary pairs. So starting off with pound dollar, I've been very bullish on this for a long time now. I've been targeting 144.75. Reason I've been targeting 144.75 is because it's an unfulfilled 38.2% Fibonacci level. And the market has a tendency, Kathy and Philip, whenever we head back inside of the AB Fibonacci boundary, and we have less than a 38.2% retracement, the market has a tendency to go back and hit that retracement level. And so I'm anticipating, again, like I say, at the moment, I know I'm short on this, but longer term, I am actually anticipating that this will start to rally again. And I'm backed up by that with the stochastic RSI on the daily time frame as well. And so I do see a little bit more room to the downside here, possibly to around 37.75 thereabouts. And then I'm anticipating. So I'm looking for a buy. Long story short, I'm looking for a buy on pound dollar as potentially as we head into next week at around 137.75 thereabouts. And then I'm looking for that dollar weakness. So I'll be looking to trade the dollar weakness heading into the week. So of course, if I'm bearish on the dollar index, then I'm bullish on the dollar secondaries and bearish on the dollar primaries, which would make for a nice outcome on that dollar CAD trade, Philip.
So it looks like the pound dollar is a pending order that you're putting on, Chris, as opposed to a live market order.
Yeah, as far as for the next opportunity, yeah. So I'm live on this right now, shorting it. But what I'm saying is, for the week ahead, I'm anticipating that this will likely fall down to about this region, 37.75. And if you look, that's actually in line with my existing trade as well, because my target is at 37.77. So I'm like literally right on where I'm anticipating that this would start to find some bulls again. So it's not so much a pending order per se. It's more of I'm looking for a buying opportunity, i.e. a candlestick formation, the stochastic RSI lining up as it is at around 37.75. And I'm bullish on pound dollar all the way to 44.75.